Happy Sunday, you guys, and welcome back to another weekly report where we take a look at the markets and talk about trade setups for the week ahead. Let's jump right in. Taking a look here at the US dollar, we had a really interesting week last week, and going into this week, we're going to be seeing some interesting market information that I want to talk about before we jump into this. On Wednesday, we have inflation or CPI numbers coming out in the morning. And this is such a hot topic right now for the US dollar, for the stock market, and for just global markets in general. Inflation, as many of you guys probably know, is really high right now. And the Fed has been attempting to talk down inflation or work their way away from rising inflation by raising rates and cutting their balance sheet. So when we look at the statement that's coming out on Wednesday, the report is going to have a huge impact likely on the US dollar. If inflation is higher than it already is, we are probably going to see the US dollar take out last week's highs. So doing some quick technical analysis, we can see that last week we basically, let me make sure this is actually supply. Last week, we had a major pivot high that did not last, but we did try to break through that level. So this week, it's going to be an interesting thing with CPI on Wednesday, because basically, if CPI comes out as higher than expected, meaning inflation is even more so high than we expected, it's very likely, in my personal opinion, that the dollar is probably going to take out these highs and continue this upward trend. However, the same concept applies when we take a look at the flip side, right? If inflation, this is a big one. And honestly, this is the more interesting scenario in my personal opinion. If inflation comes out this week as less than anticipated, the dollar could really come down hard. And there's some other markets that we could potentially look at as well. So let's talk about that scenario as well. So let's say that CPI comes out as lower than expected, meaning inflation has decreased. We haven't been seeing a lot of that recently, so this would be the more interesting report, in my personal opinion, and likely where the market would be more surprised, more excited about that. In terms of the stock market, that would be probably a very positive thing because inflation has been putting a lot of pressure on U.S. equities. But the dollar would also probably come down. And again, the scenario that we're looking for there in my most interesting scenario would be to see if we can actually start taking out the lows here. Now, again, this is a 4-hour chart, so we are looking a bit higher time frame. But for the day traders, two key spots on this chart are looking left at this area here, 103.2, and the previous swing low here on the dollar at 102.6. Now, the dollar is not what we'll probably be trading. Obviously, most brokers don't allow you to trade DXY. The dollar is just a currency index to take a look at the US dollar across the board. But let's go take now a look at some of the individual currency pairs that have the dollar in them and try to prepare for the week ahead. Okay, EURUSD is the first one I wanted to take a look at here, and it's pretty much a mirror image of what we just talked about with DXY, except it is inverted. So example A, which we talked about, which was basically a rise in inflation, would not bring it up, it would actually bring it down because the dollar strengthening could cause the euro to weaken in respect to that. Now, for me, the scenario here to the EURUSD short side would be to see if we could take out these previous lows. On the 4-hour chart, this would be a pretty significant spot if price was able to break and close outside of that range. To me, that would just be, sellers are kind of just winning here, and we probably see the thing go lower. Now, on the flip side, a bullish perspective, in my personal opinion, on the euro dollar. As I'm not super bullish on the pair in general, I don't love the idea of buying the euro. It's very possible that we do have some rumors about a hawkish ECB, the European Central Bank, which could potentially act to drive the euro dollar higher, especially if on Wednesday we get CPI numbers that are shrinking inflation. That would be a strong catalyst to potentially see the dollar pull back and ultimately cause euro dollar to break out of this range. If this were to happen, there could be some short-term opportunities to try and trade this thing back to the 61.8% retracement. Where's the 61.8% retracement? That's my bad, I didn't draw it. But let's draw it now. There it is, bam. I think that this could potentially be a play for the EURUSD going into the next week. If you're shorter term, there may be opportunities to trade that fade back the other direction if we get Wednesday's numbers as lower than expected inflation. Again, that could be a trade idea to consider in your own analysis. So something to think about there. Now, let's take a look at the EdgeFinder here. This is our proprietary software tool that we use very regularly to analyze charts, and it uses a multitude of factors. We just got done speaking about EURUSD, and I wanted to pull it up for you guys to see what this thing has. By the way, the EdgeFinder, like I said, is a proprietary trading tool that our team here at A1 Trading has put together. We've got a software team that builds a lot of stuff for traders, and information about this tool can be found down below in the description. So let's take a look here at euro dollar. It has a soft sell reading, and if we look across the board, what this tool, by the way, does is it takes several metrics and it lines them up to give us an idea as to what each category says about the pair. Now, a lot of traders, they'll only look at the price, and that's cool if that's your style of trading and that's the strategy that you want to employ. But at A1 Trading, what we do try to focus on is not just price action, but other real factors that drive currency prices, such as COT data, which gives us a -1 score on EURUSD. We take a look at euro dollar. You've got the euro under the COT report right here. You can see that the euro is sort of mixed, but the dollar is very much held bullishly by institutional investors. Now, the COT reports, you can search that up on Google if you'd like, but our tool here basically pulls in the data for that each week to try and get a gauge as to what institutional positions are looking like. Okay, so COT, that's a negative, but retail sentiment, how's that looking? Also negative. The crowd here is very long on EURUSD, thinking that it could potentially go higher, but what we know is that the crowd is often wrong, and so this is more of a sell metric. So something to think about there. Seasonality, the month of May is actually historically a positive month for the euro against the dollar. So that's kind of interesting. That's working against us on the short side, but if you're a bull, that's one positive factor. The trend reading, still negative. We have a downward trend here, which gives us a -1 in the category. GDP growth gives us a +1, and the reason for this, we can see down below in the bottom left hand of your screen there. When we look at the US versus Europe, GDP growth is actually negative in the US. Recently, we had a bit of a shrink there, whereas the euro area has not seen such factors in recent publishings. Okay, so GDP is +1. Inflation is 0, as inflation when comparing the two. Actually, this should be, I feel like this should be negative for the dollar and positive for the euro. I'll have to consult with the developer on this, but I'll take a look at that after the video. This tool, by the way, we have been working on it for a few months, but it still has minor bugs and things that we are fixing as we go along. So bear with us on that. Unemployment numbers. Unemployment numbers are higher in Europe, lower in the US, so that's a negative for the pair, as we would probably want to be more betting on the US in the case that they have better unemployment numbers. Interest rate divergence, we see that in terms of this category, we have a bias towards USD, as the euro area offers a lower percentage point in terms of their interest rate. So I know that was a long drawn out look at it, but what that tells us is that, you know, across the board, we have a slight bias towards the sell side, which makes sense. This pair has been very weak, and this thing, the EdgeFinder, has been very bearish on the euro dollar for a few weeks now, considering all factors. So to me, a big scenario would be to break out of this consolidation, retest. That could be a very profitable setup, in my personal opinion, and we'll look to see if that occurs. Next up is going to be pound dollar. And just before I show you the pound dollar, we just showed you guys the EdgeFinder. It's our tool that we've been working really hard on. Down below in the description, if you would like access to the EdgeFinder, there is a way to get a 20% off discount by using the subscriber discount code that's down there. If you want to use our software, if you want to try it out, join the community of people who are using it, please, we invite you to do so. There's a link in the description, like I said, so you can click that. You can use the subscriber discount code and get access to the software for yourself. And just to show that one more time, we've added so many more pairs to the charts that are available. You can see we've got across the board quite a few different things. We've got, commodities like gold, indices like SPX 500, JP 225, UK 100, Germany 30, right? You've got so many different factors here, US 30, as well as several currency pairs, of course. And then we've got the score chart summary, which basically will show you a list of all of the different assets and then give you a summary of the scores involved. So this screen by itself is pretty helpful. So yeah, check it out if you want down below in the description. Speaking of this, next USD heavy currency, let's take a look at the pound, which has been really taking a beating in the recent risk-off environment that we've been in. Risk off meaning that investors are looking to take risk off the table, which is very apparent when you take a look at the S&P 500. If we take a look at this thing has been beaten down like crazy. So back to the pound, this has suffered a lot because the pound in general is usually considered a more risky currency compared to the USD. And any chance sellers have been getting an opportunity, they've been selling this thing, and it's been pretty aggressive for the sellers. If you're a bull, it's been a tough game to play. The question is, will this week we get a bounce back? And again, it's heavily going to be dependent on the Wednesday report, I would say, the CPI numbers from the US. Now, if we take a look at the lower time frames, so look at the 1 hour chart, it doesn't look good for the buyers just yet. We've got a lot of resistance overhead. If this thing does start to pull back, you probably have what this looks to be like a 50% retracement. Let's see if that is correct. Just about a 50% retracement here at this level, and then the 61.8 as well. So, you know, from the shorter term perspective, this thing just has a lot of overhead risk, right? There's a lot of, you know, as that thing rises, you probably have a lot of sellers in this area who are saying, "Ooh, look at that, another pullback to sell." We've done this, you know, we know this story, right? If you look scrolling back here, every little dip, every little rip has been caught by a big sell order. So for the time being, that is the pattern that we're seeing on pound dollar. Going into this week, you know, for me, it's sort of the same boat. If this thing pops to the upside, the first reaction would be more sell heavy than buy heavy, and just kind of not wanting to fight that move. Now, again, this is just in the context of a risk-off environment. If we get something different, and a major risk-on component would be Wednesday's CPI coming out as less than expected. If inflation subsides a little bit, you would probably see pairs like pound dollar fly to the upside. And again, that would be off of the back of a potentially weakening USD, risk on coming back in, people willing to buy some of the other currencies. Now, which brings me to another one, right? You take a look at AUDUSD. This is another risk on currency pair, one that, you know, historically is seen as a riskier currency versus a safer currency. The Australian dollar, just generally speaking, will fall during times of fear and panic and things like that, right? And again, the reason for that is that people will start flocking into the US dollar. So for a risk off perspective, if you're just selling this trend, if you're just riding the momentum here to the downside, what sellers would probably like to see would be a breakout through the previous lows. We can take a look at what was previous demand. This is awfully close to this area here on the 4 hour chart. If we break that, you know, you may have opportunities to potentially trade the pullback and continuation. It seems like, oh yeah, you're already, you know, why would you want to sell low? But remember, a market in momentum can go on a lot longer than traders often expect. If this thing gets a rally and you are sell biased, which I personally am on this pair until further notice, we are looking for predominantly sells on pairs like Aussie dollar. And that is just going with the risk-off environment that we're in. If we go take a look at the EdgeFinder, I happen to know that we can scroll down here to the bottom of the screen and look at this, you guys. There it is, Aussie dollar. We'll click on this, and let's go take a look at Aussie dollar and see what the EdgeFinder has for us in terms of this pair. And you can see it had a really high sell rating on the EdgeFinder. And when we look at you know, this market, you can already see the pair has been sold heavily. So and the thing is, like, as long as it wants to continue, we're not going to try and fight that move. We're just going to go with the flow here. So again, oh, sorry about that. I think I must have backed up or something on my thing here. Let's see if we can find Aussie dollar. Where is that? So yeah, when we take a look at Aussie dollar and we have what we would consider to be a downward trend, fighting it can be a tough uphill battle. Well, I guess, ooh, look at this. I think we're having some development issues on the back end for Aussie dollar. So unfortunately, we may have to come back to that one. The point is, right, when you have a market that's trending lower like this, if you're trying to constantly fight the move, like you're trying to buy this thing, buy this thing, buy this thing, you may get a bit lucky here, right? But for the most part, the downtrend is just going to just dominate the game, right? So that's why we have to be very careful with trying to fight a downward trend until it reverses. Now, for example, let's say that this market has an excellent week. I personally, like I said, I wouldn't be buying it. I may even consider selling it. But let's say my week goes poorly if I try to sell it and I take a sell and then the market goes up, right? I am the kind of guy with my trading and try to be in my personal life as well, the kind of person that will admit when they're wrong, right? Because in trading, it actually really pays to admit when you're wrong because, you know, then you could potentially turn around and look for a bullish opportunity. But for now, that's not what we see happening in markets. So my first reaction is to say, okay, if this thing comes up, I can potentially look for and anticipate some opportunities to sell this market with a good risk to reward. So for example, let's say we're looking for shorts on Aussie dollar this week, stops above structure, targets back down at the lows. If you know my trading style, you know I don't actually use take profits. I usually just scale my trades in. For example, like I let's say I sold this, right? I actually wouldn't have a take profit on the trade. I would just have a stop loss, right? And the idea being if I stop out, then whatever. But if I make a trade and then it continues down, 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 what I'll then do is I'll take that stop loss and I'll trail it behind price. And that's just how I've traded for years now. My style of trading is I have a low historical win rate, about 43% the last time I checked on my MyFX book account. But the win rate is less important when you consider that my trades tend to be, you know, I tend to let winners run, and that's kind of the key to my my trading style. So it's what's comfortable to me. It might not be for everyone, but that's just how I approach it. I trail stops, I let winners run. So I'm looking for those opportunities like on Aussie dollar where we could get something like that. Here's another pair that I want to take a look at here with you guys. Pound dollar. So people have been asking me about this one. Nick, you know, you were bullish on pound dollar. What happened? Well, I was bullish on pound dollar and I made some money during this period of time. And then I was still bullish on the pound dollar and I lost some money over here. Overall, pound dollar is one of my best currency pairs, meaning over history, I've done the best, not the best, but probably one of the best pairs for me in terms of my strategy. Pound dollar trends very beautifully sometimes and gives me those opportunities to trade with a great risk to reward. You can actually see some of my orders here on my broker. I am logged into my OANDA account. I took trades that in the past have worked out really well. I took some trades here, you can see, did not work out so well there. Some trades here. So I've traded this pair a lot, and I've caught some excellent moves over the time of my trading. So for example, here's a trade that I caught on pound yen, entered around here, closed around here. So this pair has been really good to me over the time that I've been trading it. Recently, I haven't been trading it so much, and predominantly, I just didn't love the, once we sort of started to break out here. I guess I wasn't trading pound yen, by the way. That's why I'm not seeing any orders here. I was probably trading like pound Swiss or one of the closely correlated currency pairs, pound Swiss, pound dollar, etc. But the idea here being, for me, what I need to see before I start getting bullish on pound yen again would be to see some sort of break of resistance. We've been seeing, lower highs. We've been seeing a struggling market here. That upward trend sort of paused. So for me to get bullish again, what I'd like to see is a breakout here. And again, I'm not going to anticipate that that's going to happen. I'm going to wait to see that this move right here starts to happen before I try and get long on pound yen again. So I'm watching for that this week. I don't have any interest in personally shorting this pair at the time of filming this. I would like to just be looking for bullish setups if we start to break the other direction. Nick, why wouldn't you want to take a short trade on pound yen? Well, a couple reasons, but number one, the biggest one is that it's actually expensive to buy the yen and buy the Swiss franc. And the reason I say that is that there is a carry trade. If you're a swing trader like me, meaning I hold trades for a day, 3 days, 5 days, 10 days, just depends on what the trade is doing. It costs overnight swaps to hold particular positions. And I don't love to short this pair because even if I have a good setup, if I short this, I have to pay an overnight swap, which can get expensive depending on which broker you use. But for me, I just prefer to trade this one to the long side mostly. And then, because then the swap is not so negative. So just, little tidbit for the more advanced traders out there. But I'm waiting to see if we can get a break to the upside before I look to go long again on this pair. Speaking of pound pairs, we'll take a look at pound Swiss. Pound Swiss, another pair that I've been looking for. Oh, here's the trade that I was talking about. So you guys remember I was saying, you know, I was during the pound rally, things were looking good. Well, I caught a pullback, or what I thought would be a pullback, and then it kept pulling back. I don't know if anybody else has had that happen to you, but it's definitely frustrating. I caught this move, tried to catch it, and then I failed, and then I caught again, and then I failed. So terrible trader, worst trader on YouTube. You know the deal. So it is what it is. No, but I mean, that's the thing. I just kind of didn't get the trade that I was looking for, and since then have been opted out of the trade, right? The trade just wasn't there. It didn't happen. And until things start to rally again, like I look for momentum. And here's an example of when momentum doesn't work, right? You start getting that breakout. Things look beautiful, looks really good. And then price pulls back. You take the trade as you should, and it just doesn't work. So it's just part of trading. There's just a level of variance to whatever strategy you use. And for me, like I said, same thing in pound Swiss. I'd like to be long on this, as this one definitely is a costly one to short. If you know anything about swing trading, if you know about swap rates, if you don't, feel free to look them up. But they can be a little bit expensive. Holding this pair short, especially as you know the UK offers a high interest rate. If you are talking about Switzerland, they have a very low interest rate. So you know, shorting the pair means you're shorting the UK's interest rate and buying the Swiss interest rate, which gets advanced, but basically just know the swaps on this is very negative. So holding it for several days can be expensive. Anyways, I'd like to see this thing break out. If we get it this week, then I'm definitely interested in potentially going long, especially on a break and retest if we get some positive risk on sentiment. Now, again, this one, Wednesday, could potentially be impacted by US CPI. Nick, there's no USD in the pair. How is this going to be impacted? Because all markets are related, and a lot of times people think they trade one, but really by trading any, you kind of trade them all. They all sort of speak. Oil speaks with, you know, the stock market speaks with the currency market speaks with the bond market speaks with the, you know, the rest of them, right? All these markets, they're to some degree related because they're driven by a lot of the same factors. Pound, higher risk currency. Swiss franc, super low risk currency. You put that in perspective, if there's something that causes markets to pop, that's why a lot of times you'll see the pound Swiss make a move higher with US stock markets or just global stock markets. So anyways, if we see some form of a positive catalyst on Wednesday that could get us higher, I like the idea of breaks and retests on this move here. That is something that I personally will be looking out for. Speaking of stock markets, let's talk about the S&P 500, which sat at the end of this last week at support. We are sitting daily chart wise. We're sitting at a level of support. Now, big question mark here. My worst fear, and probably the rest of the stock market's worst fear, would be to see this thing break and close outside of this range. Now, if you're a seller, then that would be excellent. But so far, we are holding on by a thread to this level. We tried to rally, we failed back down. The question is, will this thing double bottom and rally this week? Again, I think it's going to be heavily dependent on Wednesday's CPI report. But for the bulls who want to be bullish, but they're waiting for an opportunity to do so, I think the first thing we need to see in terms of momentum would be taking a look at the 4-hour chart. Can we break structure here to the upside? And again, this would be the first spot where I say, okay, buyers have something here. We've attempted several times to take out the 4,300 mark and failed multiple times. So if the bulls do come in hot here, now again, this is vice versa. You could go either way with this. If the trade were to come in where you see, you know, just ugliness and the stock market continues, we may be headed lower and there's opportunities to look for shorter term trades to the downside. Again, a risky game to play, and I personally don't like to short the US stock market because if you scroll out long enough, you'll see why. It's a really ugly, tough thing to short. It does not usually work out well. Though from a very short-term perspective, there perhaps is some opportunities to look for. Scenario number 2, so we'll say number 1 is the bad side. Number 2 would be, let's say the good guys get a hold of it and we break to the upside, right? If we break to, and I take that back. Short sellers are not bad guys per se. There's no bad guys or good guys in trading. The thing is, there is only people who make money and people who lose money. And, you know, the thing is, short sellers play a vital role in markets in general. So take that back. Anyways, scenario number 2 would be for the bulls to get a hold of it and say, let's say we break out the highs here. If we break out the highs, perhaps on Wednesday or Thursday of this week, that could be a really great signal that the market perhaps has found a bottom for the short term and some excellent risk to reward trades could come into play. So for me, SPX 500, this is the scenario number 2. This is the one that I would be very interested in looking to get involved with. I have been buying stocks on the way down as an investment situation, but from a trading perspective, there may be some opportunities to see a break and retest opportunity here. So I like that. We'll keep an eye out for that on SPX 500. Another market, of course, that everyone wants to talk about is gold. What's going on with gold here this week? And gold has been so tough, man. Gold has been so tough. To the traders out there looking at gold, you know, it's been a rough one for us. It's been, well, at least for the bulls, it's been tough. I haven't really been trading gold personally myself, but it's been a rough one to watch because this thing has been trying to find buyers and it just can't get it. And the sellers, in my personal opinion, just have control of this market. We've been seeing lower highs. We've been seeing structure that just tells us that, you know, this thing is just bearish until further notice. If this thing pops to the upside, we talked about this on Friday, by the way. If you guys were watching the NFP content, we talked about short ideas on gold, and you know, that ended up working out very, very well. This rally into resistance on Friday just absolutely tanked. It was a beautiful setup for sellers. So, you know, that was kind of a crazy thing to watch. But well, actually, I'm sorry. Did I say that wrong? I said that wrong. This rally, we were looking at this level of resistance on Friday. I got my time frames mixed up. This was the rally that happened on Friday. It came right up to this. And if you guys go back and watch the stream, we marked this zone here and price like came into that spot perfectly, touched it and fell on Friday. So, you know, the thing is for the bulls here, they need to start seeing something happen. Something needs to happen before there's bulls. Like you need to see that run start, in my personal opinion, before looking at any potential upside. From the downside, though, if we break this little structure here, if this attempt here by the bulls fails, you know, I'd say sellers were probably headed back down to the previous lows. And again, gold just cannot seem to catch a bid for the time being. So, you know, why not consider that idea? So if for sellers, a move back down to the previous low, 1850, is very possible. But if you start scrolling out, you can kind of see where we really could go if the sellers are able to like break that level, right? If we were to break that level, where do we go? Look left. I mean, you really don't have a major level to contend with until you get down to 1785, give or take. So that may be something to look out for on the bigger picture if you are on the swing trade side of things, perhaps looking at pullback opportunities in this area with a target ultimately of 1785. So something to think about. Guys, if I take a trade this week, you will see it inside of the private Discord channel. If you're not already in the Discord, take advantage of the sales that we're doing right now. You get access to the trading chat room so you can hang out with the rest of the gang here. You get some Ty Lopez going on, get some knowledge being dropped. So come join us. Come join the action. Again, every trade that I take will be personally shared inside of the Discord. You can see what I'm trading. More importantly, why I'm trading it. I give full breakdowns with each and every trade that I share within the group. You can see the entries, the exits, what I'm risking, what I'm targeting, all that sort of stuff. You can also see the trades being taken by Any, Frank, Patrick, and Ivan, our other top analysts within the A1 trading community. So check it out if you haven't already. It's linked down below in the description. Remember, you can get access to the A1 EdgeFinder, which is our proprietary trading software tool for 20% off, but you'll also be able to get access to the VIP group for 20% off. Both are discounted this week, so take advantage of those special subscriber discounts, and I hope to see some of you guys in the community. Thank you for watching. Have a great week.